All right, folks, welcome. Short vol live show reboot. I'm redoing the show because I kind of messed it up the first time. So here you get the redone show for today. Markets in turmoil. It is November 20th, 2018, and the markets indeed are in turmoil. Stay tuned next for analysis of the volatility term structure. A talk about some new volatility products and what to do moving forward in this crazy marketplace. Stay tuned. I eventually moved up and made bank trading size for one of the most respected firms in the world. In the dot-com bubble, things went south for me. The trader lifestyle caught up and I lost everything. Years later, I fought my way back, and I'm now here to help others on Trader Talk. All right, folks, welcome back to Trader Talk. And I came on for a little bit a few minutes ago, but I really wasn't satisfied with the quality of that particular program, so I'm just sort of redoing it right now. Couple announcements first. If you did watch the video yesterday on the James Courier and the firm blowing out, please check that out. It's gotten a great response. I'm very excited to get a bunch of views, but more importantly, some of the victims of that debacle have contacted me, as well as a lawyer who is interested in representing people. So if you are interested in getting that information, please leave me a message somewhere. You can reach me through my Twitter account, might be the best way, at the famous Dave. It's like at the famous Dave, or you can just leave a comment below and contact me that way. My email is also a link in the description. Anyway, that I was watching the thing. What was it called? Tasty Trade had a little analysis of that whole video and that guy as well, and I didn't listen to the Tasty Trade one until after I'd done mine. Actually, I didn't even know it existed, but they had some good points about how the guy was just trading with too much size, that the natural gas contracts are big, and the Tasty Trade guy was saying, Tom Sosnoff was saying he has a very big account, but even with his very big account, he would only trade up to 4 lots in nat gas options, and this guy was just trading with way too much size. Like I said, I never wish bad on anybody, and it's unfortunate for everybody involved, but the situation, I just believe, wasn't quite handled right. Anyway, when the market's grinding lower, I basically didn't have any position on yesterday because I felt like we were definitely going to move lower. And so I was free to actually, I put a little bit of a position on today in UVXY. I did buy the Jan 60.62 put spread and the Jan 58.60 put spread in UVXY with, that was when UVXY was trading around 65. So we're back down to 63.50 right now. Let's take a look at options markets. I've been looking at ways to creatively short this that give enough time to get the job done. You know, it's a challenge to, if you do something that's, if you have a specific, let's say you have a certain amount of money that you can devote to shorting UVXY. Well, what's the best way to use that money? Well, if you want the most bang for your buck as far as deltas, then the best thing to do is to trade options that are close to expiration, because those are cheaper, right? So, if you just want total delta and you think a move is going to happen almost immediately, you could choose something like the 30 NOV options. Okay, that gives you 10 days to make it happen. And right here, stocks or the ETP. I'll say stock, even though I know it's not stock. So you don't have to write in the comments it's not a stock. I know it's not a stock, but it's just shorthand. Stock trading 63.67. If you want to just do a pure delta play, you might look at buying something like the 61.59 call vertical. So you pay 93 cents And if in 10 days we're below 59, this thing doubles in value. More than doubles in value, right? Because this put spread, the 59.61 put spread, could be worth up to $2. So if you're paying 93 cents for it, you would more than double your money if UVXY is at or below 59 in 10 days. Okay, so that's an interesting thing. Now that would be a pure delta play. If you do that, though, the clock is ticking on you, and this could conceivably 10 days from now be higher than here. So that would be a raw delta play. However, if you want to give yourself a little more time, so let's say we did this spread. Okay, which one do we have? Let's say we did the 60-57 spread. Okay, so the midpoint. So if we paid 123, this could be worth $3 at most. So let's say we did this 10 times. Let's say we have, for example, $5,000, okay? So if we were to do this spread 40 times, that would cost around $5,000, right? So we do the spread 40 times, that would cost $4,700 in buying power, and you are risking $4,700 to make $7,200 if all goes well. Okay, let's get this all the way up to exactly around $5,000, closer to $5,000. So if we were to do it 42 times, that would be too much. So 41 times would be right around 5,000, slightly less. I guess 40 times. 40 times buying power effect, $5,000. Okay, so that's with it priced 121. Okay, let's take a look at the deltas if we were to do this particular spread. So what I'll do is I'll go to the Analyze tab. I'll cancel out any other things that are there. And this would give us short 354 deltas right now, costing 100 a day in theta. Okay, so for $5,000, you can put this trade on. It's a very aggressive delta play, and you're making a bet that pretty quick, within the next 10 days, this thing is going to move lower. Now, what if you want to give yourself a little more time and move it out, give yourself more time for this to happen? So what if we just move the same spread out to January? So exact same spread out to January, where prices are now in January. Okay, let's analyze the trade. So this, if we did the exact same prices and we move this out to January, this same trade would cost $7,000. So we'd have to back down how many contracts we could do. And what I'm doing is I'm just checking the buying power for a number of contracts here. Okay, so it's about 20. It's about 23 contracts here. And 57. That's weird. It says order 1, order 2 description here. I'm not sure why that's doing that. So let's just clear out and try this one more time. Create duplicate order. All right, so for the same order, if we were to use Jan, instead of that 300 deltas, it's only 160 deltas. So basically, essentially, your delta is sort of cut in half for the Jan one. And the reason for that is just because we're farther from expiration. So if this were to move down just a buck or two, you wouldn't make as much money if they were Jan options, because you still got all that time until expiration in January. And if we were to move this out to, say, March, you're going to notice a similar thing. The delta's less, the decay's less, you've got more time to go, but you're not going to make as much money on a down move if it does happen. So I would suggest if you're looking to put a vertical spread on that you just kind of like check out different options and put them in your analysis tab. If you don't use Thinkorswim, other programs have ways to analyze options as well. And just check them out. See how much it would cost you to do this, how it changes your buying power, et cetera, et cetera. Now let's see what we've got here. I'm confused as to why it says this says negative 34,000 here. It's something's wacky with that. Naked short 6, Jan 56 puts. I don't know, something wacky is happening with that analysis tab there. Anyway, so that is one way to analyze things. Another trading idea that we were talking about in UVXY is to do a calendar spread. Now, once again, calendar spread, it has less of a delta attached to it, but it is going to operate over time. And we know these deltas are going to change as time goes by, very importantly. And so when you analyze these things, you want to look at you want to move time forward as well. So if we were to do an example of a calendar spread, let's do that. So March. Let's pick something that's not too far from the money. So let's try maybe the March 48 put, buy the March 48 put, and sell the Dece 48 put. So if we were to do this, and let's say we do that 8 times. So if we were to do that 8 times, it would cost 4,500 in buying power. So let's maybe raise it to 9 times. So 9 times would be 5,100 in buying power. So 8 or 9 times. That would give you a short 50 deltas, collecting 23 a day. And as time goes by, your delta is going to increase as we stay away from the strike. But as we move towards the 48 strike, the reason we're doing this trade is because we're thinking that we're slowly going to melt down towards the 48 strike. And that's how this trade will work out the best, is if we just slowly cruise down to the 48 strike as we get closer and closer to expiration. And if we expire in December, right around the 48 strike, that would be perfect for us. But anywhere we expire in December, we can roll this December option out so that we continue to collect decay. The beauty of this trade is that you're financing that March. I like to think of it as financing that March put by selling a December against it, and then December will expire, and you'll still have that March put on your sheets to get short with. These ones work nicely over time, and when you're picking the strike, you kind of want to pick a strike where you think that the underlying is headed towards, and so you could use some sort of concept in your head of average contango between now and then. And I know that's hard to figure out average contango between now and then when we've been back and forth out of backwardation. But I guess you could use historically. I would maybe use an average contango of somewhere around 5%, thinking that at some point we will be back in contango in the near future. But it's hard, it's hard to say. We don't have a huge history of trading the VIX. It's only really been since 2000, and that's only 20 years, so it's not a huge amount of time. So we could find ourselves in backwardation for a continued period now, and maybe in a year or two, our assumption that we're in backwardation 80% of the time may change. I mean, if we had an extended down market here, that assumption may get put on its head at some point. I sort of doubt it, but it may. So that's an idea of a calendar spread. I know it's been very painful the last couple of months. Every one of these shorts seems to blow up, and so it's hard to keep sticking with a strategy when it's not working over a period of time. It can be frustrating as the E-minis kind of roll over a little bit here. I did find a mutual fund that is in the volatility space. I just found this one. It's called ABR Dynamic Short Volatility Fund. And what they do is they change your exposure to, it's designed to make money when based on short volatility, and it's a proprietary how they trade it exactly, but they basically trade in and out of treasuries as a sort of bank account, and they use VIX futures to short the VIX. It's sort of at their discretion. I looked up these two guys, Taylor Lukoff and David Skordel, and I hope I'm pronouncing your names right. And they both came from the Amex. It looks like they were Amex option market makers at one point, and they put this company together a few years ago. Of course, the fund hasn't done so well because of that Vomageddon thing, but I think it's a promising thing, and it's pretty interesting. It looks like the minimum investment is $2,500, but it definitely looks like an interesting thing, and I definitely think this concept will work for them at some point. So if you'd like to check it out, look under abrdynamicfunds.com and check them out. I did a little research into the two guys, and they seem like they've got their acts together. They seem like very knowledgeable people, and so this is an option for you if you want to participate in the short volatility as maybe a proxy for being long the market, but you don't want to babysit it every day or use your own option strategy. You might consider this mutual fund here, ABR Dynamic Short Volatility Fund. I'm not being paid by anybody to say that. I just found it and thought I would mention it to you folks. I am going to repeat from, sorry if you watched the first attempt at this show, but I am going to repeat the list of my Patreon members because I'm grateful to you all. So Patreon had this thing where we were supposed to thank all of our members and make a video or something a few days ago, and so I want to, in that spirit, I want to just list my members. So thank you, Abraham. Thank you, Anthony. Thank you, Badresh. Thank you, Brent. Thank you, Brian. Thanks, David. Thanks, Dave. Thanks, Jane. Thanks, Kevin. Thanks, Mark. Thanks, Mike. And thanks, Seth. It's a big deal that you believe in me and that you hook me up like this. And it's a huge hookup because it helps to finance this channel and just like my internet and all that sort of stuff, equipment. And so I'm very grateful for people for supporting me on Patreon. If you don't support me on Patreon, I would love your support, even if it's just $1, just that token buck, just so that you say, I do appreciate what you're doing, Dave. I don't have a bunch of money to put into it, but I'll give $1 just so that you know that I appreciate it. So if you want to do that, that would be awesome. There's a link in the description for Patreon. You can find me, I believe my Patreon is Famous Dave, but either way, there's links in the description. It's David Lincoln. Patreon.com/David Lincoln. All right, so let's take a look back at the market. Down 39. So we're kind of hanging in this area here, and sort of as I suspected, we're continuing with this sort of slow grind here. So it's like we sell off, and then we have this violent rally about halfway back, and then we start to grind lower again. It's not a fun cycle to be in, but it's kind of the cycle that we've been in for a little while. So here we have here, if you take us from the low, it looks like we've been slowly rallying since 10, but it could very easily roll over again. VIX, if we take a look at the VIX real briefly, 2273. And let's see what else we have here. I am going to take a look. If you are watching right now, and you do have questions or want to talk about something, the chat is open, and I am looking at it. I know I don't look at it enough a lot of times. So hi y'all, how you doing? VIX move up. Once we get up here around 20, the mid 20s, it takes a lot to keep us here or to move a lot higher. There's not as much of a chance of a really violent move as when we're at 10 or 11. So that's why I feel a little bit more comfortable, at least long term, putting something on short here that we will get back below 20 at some point in the next couple of months. I feel much more comfortable doing that than, like, say, shorting 11 or something. We haven't managed to, with the VIX, to get above that 27 level, I think it was, that we hit on around the 10th, 11th of October. That was the first kind of violent move down. We haven't topped that yet, but if we can break below that level in the indices, then we may get that. Look, you can see we're pretty close to the level here. We haven't quite gotten there yet, but if we could break through that level, which is, it's basically 2600 in the SPX, we could see the VIX break that 27 level. NASDAQ down 100 today. Let's look at the NASDAQ versus, now the NASDAQ is lower than that October level, like considerably lower. The IWM has not broached that lower level yet, and neither has the Dow. So it's just the NASDAQ that has fallen below that first October sell-off level. And look at that NASDAQ chart. I mean, it just doesn't. It's like basically we're back to where we were at this time last year, pretty much. That huge rally that we have is slowly erasing here, folks. I mean, we are well into a correction at this point. So we'll see where it goes from here. It seems like you want to hold off buying the market, because every time you buy, you say, oh, Apple's 190. Wow, what a great buy. And then all of a sudden, Apple's 185, and then it's 175, and stuff seems to go lower and lower. But I personally, for my 401k, which I've been in cash, I started today to buy a little bit of the SPY. I generally believe that you should just, as for your long-term holdings, you should just have it automatically invest every week a little bit, or every whatever amount of time a little bit, and that's it. And that's the way it's always worked as far as long-time holdings for me. I'm in the situation where my family has other holdings, and my 401k is small compared with that. So I don't take it. I take it more as like a tradable opportunity than the majority of my savings, my 401k, and thus I play around with it a little bit more. But right now I'm basically all in cash except for about 1/5, which I bought the SPY with. All right, so Tesla yesterday was actually up during the day. If we look at the chart here, it's a pretty amazing chart. It's very hard to figure out how Tesla trades, and it's a monster of a stock, but it's amazingly has come back to 300 several times, so I wouldn't be surprised if it gets back to 300 again at some point here, because it seems to do that a lot. The Dow now down 470, and the E-mini is rolling over a little bit more. We seem to be a little bit off the lows, but I mean, this is not like a capitulation rally at all. We just basically rallied off the lows, and then it feels like we're just going to grind lower from here. It really does. I don't like to be one to predict the future, so who knows, but it just feels like we're in a new environment now where stuff just doesn't rally back, and if nothing's happening, we just sort of grind lower. Anyway, so stay safe out there, folks, and good luck with the trading today, and thanks for watching, and I will see you in the next one. Thanks.